What's up, guys? Welcome back to DCA. Today what we're going to do is talk about Bitcoin. Is this a double peak cycle? Before we do that, I want to quickly do a market rundown and go over the DCA index levels with you guys. So Bitcoin right now is sitting right at around $62,000. The DCA index level is right at around 55. So you could be choosing to acquire more here or standing still, or potentially, if you're very risk averse, even selling a small amount. We have Ethereum sitting at around 56, so sort of the same deal. And the price is right at around 41.30. Cardano is sitting at around a 40 on the DCA index level. So Cardano is doing what Cardano does, and that's sitting around, not doing much, being a stable coin. So, with Cardano, this is its MO, guys, right? It goes up in a burst and then just sort of moves sideways. And that's what it's been doing for some time now. So, I think people get very frustrated with Cardano for that reason. But, if you keep things in perspective in the long term, Cardano has been a great investment. It just doesn't do these frequent pumps and dumps like some of the other altcoins do. So it sort of moves up and then goes sideways for a while and then up and then sideways and then up, right? That's what it does. Solana, on the other hand, has been showing a bit of strength right now, with respect to Bitcoin. So Solana is sitting at around 200 at the moment, and is actually at a 61 on the DCA index. Okay, so that's kind of where we're at for the 4 TradingView indicators that I have so far. I'm working on some others. I'll be getting those out to everyone soon. If you're interested in these indicators, these essentially show the market cycle peaks and tops, or attempts to demonstrate those levels. You could head over to the Telegram channel, and there's a form to fill out there, and then I will send them to you. Okay, guys, so this is Bitcoin, and we're looking at it on the daily charts here. So the question on everyone's mind is this a double top that we're forming at the moment, which would indicate that, we'll hit this level here, followed by a correction, coming back up to it, and then this leads to a larger correction. And I'm going to make a case why I don't believe that we are, and it's sort of the same thing that we've talked about several times in the last few weeks. And I keep reiterating it because I think it's important. I think it's important that, people not panic sell just because we have a small correction here. The Bitcoin bears, they are there every step of the way, and they've been there every step of the way. Every single step of the way, from 10 cents up to $62,000. Okay? If you shout it enough and you shout it long enough, sure, you're right every once in a while. And we've said this before. We've said this multiple times. The adage, even a broken clock is right twice a day. But it doesn't change the fact that if you've been saying that Bitcoin is worthless for years, or even in this market cycle or any of these market cycles, sure, eventually you'll be right. Bitcoin will go on a correction, but it's shown itself to be resilient, and it's shown itself to prove people wrong time in and time out. It's back to this idea that, if we look at historical trends, any time that we have come back to a prior all-time high, there has been a correction. So, it's sort of puzzling to me why, when it happens again here, you have all these people out here so confident now that this is a double top and that we're going to correct, when this is all we have seen. So the white line shows us coming back to a prior all-time high. And, what do you get? Every single time there's a correction. Every single time. So, and this one, I kind of broke it down here. When we got to the top, when we got to the prior all-time high here in January of 2017, we had a big correction, 32%. We came back up, got back to this level in general again, and then about a week later, we had another 30% correction. We got to this prior all-time high, had a correction, got back above it for about a week, maybe a little more, and then came crashing down, another 30% correction. Okay. Importantly, the second time, and I think this is a key element of knowing whether you're in a correction or a full-on swing of the cycle, it held the 20-week moving average. Okay. So right now, the 20-week moving average is sitting at around, somewhere at around 40. We could just take a look. I think it's at around 42,000 or so. So right now it's sitting at, around 43.6. Okay. I don't think that we're necessarily going to correct down to the 20-week. In fact, if you look, a lot of these times, even in the face of decent sized corrections, we have not got back to the 20-week. It stayed significantly above. But in this case here, it did go down to the 20-week and held it as support. Now, I point this out because I don't want everyone to think that this, if this goes on for a month or more, if we are trending downward, that, the cycle's over. Because if you look here, we didn't get back to this level again for 54 days. And this is why I'm pointing this out. It was 54 days. And if you look from here, when we first got back to the prior all-time high but didn't close above it, it took us 49 days. So we didn't get above and stay above the prior all-time high for about 90 days. Okay? So we got to the prior all-time high, this late 2013 high, and we didn't get back above and stay above for 90 days. Okay? So don't think that if it doesn't happen right away, if we don't just go straight to 70K, straight to 80K, that this indicates this cycle is over. There will be turbulence. There's going to be turbulence every step of the way. And I wouldn't doubt if we see something like we're seeing here. And, it just goes to show there's evidence we weren't able to get back above that level for 90 days once first getting there. So this doesn't have to be a quick thing, and that's fine. That just gives you more time. If it does protract out like this, that just gives you more time to acquire more. The point is, the bears are always going to be the bears. They're going to, they're going to sit there and tell you that whatever chart they can draw that will support the evidence that Bitcoin is going down, they'll draw it. When or if the double top doesn't work out, it will be, a new chart. It will be, they'll be talking about the head and shoulders next. Once this goes up, you can go on TradingView right now and find some of the most upvoted comments talking about, oh, here's the head and shoulders. It's over. This market cycle's over. And sure, they were right in the short term, right? They were right that in the short term, a correction was coming. But who cares? Who cares about the short term? They were also telling you that down here in March, that it was the final nail in the coffin for Bitcoin, and it's over. So, if you're letting people get into your head about where we're at, it can be really damaging to you. It can hurt you. So the better way to approach the market is come up with a strategy and don't say, oh, we're definitely going down or we're definitely going up. Okay. That should never be the way you approach a market. The way you approach the market should be, if we go up, then X. And if we go down, then Y. That way you have a plan, a set plan ahead. It's not, so you're never caught off guard that way. If you're emotional and telling yourself it has to go down, this cycle has to be over, that's when you FOMO in and try and catch something when it's pumping up. And then, inevitably, right when you do that, it goes down. And vice versa. If you're saying it has to go up, then if we do get a correction down to the 20-week moving average, then when it does that and it's heading down, then you panic sell. And right when you panic sell, that's when it's going to go back up. I mean, just take a look here, guys. If you draw this from here down to the 20-week moving average, so let's say it doesn't just go plummeting straight down. Let's say it does it over the course of a few days, right? That would be around, this will continue to trend up at least for some time. That would be around 30% correction. Now, recall what I just said back here, right? We went through 2 30% corrections. There was one, here was one. Okay, so the precedent for all of this to happen is already in place, and you shouldn't be caught off guard if it does happen. And that's why I'm just making this video again, because I'm hearing so many people saying now, oh, this is a double top. And I just know that especially if there's newer people into the market, it's tough to know who to believe, and it's tough to know who has your interest at heart, and it's tough to know who's credible. So, that's why you have to look at the evidence. You have to look at the data. It's why I always say the data is all that matters. My opinion doesn't matter. Whatever other YouTuber you're watching doesn't matter. Whatever you're reading, whatever article, whatever you see on TradingView, it doesn't matter. The data is all that matters. And the data suggests that every single time we have hit a prior all-time high, there's been a correction followed by it going back above the all-time high. So that's it, guys. That's it for this one. I just hope to instill some confidence in you that, this is what the data says. With that said, the last thing I want to say, it doesn't have to play out like that. Personally, I'm taking the stance that this is what we've seen many times in the past, and therefore it's most likely that will happen again, right? If something happens 100 times in a row, why would you expect on the 101st something different is going to happen? Doesn't mean it can't happen differently. It just means that we have demonstrated that this is what typically happens when we reach a prior all-time high. So with that said, guys, if you like this type of content, hit like and subscribe, hit the notification bell, and head over to the Telegram channel if you're interested in the DCA index indicators. Like I said, I'm giving those out for free, and they're useful for identifying where you're at in the market. I'm going to make a video this week discussing those in much further detail and how you can use them exactly to sort of, move through these market cycles. So yeah, until next time, see you.